Namaskar. We have seen two videos on income tax related things. Now we are going to continue with the income tax related thing. There are more than 50 items of exempted income, including income of non-Indians. So it is only taxed. Income tax is in our country. Taxes on Indians only, either resident or non-resident. Both are in certain country which we have discussed already. So now, income received from international organizations, United Nations and UNICEF, all those things, it is exempted fully. Income earned through agriculture, it is exempted fully. It will be added to the total income for calculating total income. All these exempted income will be added. So what does it mean? Suppose a person has got only agriculture income, there is no income tax. But he has agriculture income and income from house property or any other this thing, or salary income, then this income will also be added. Let us say he has got salary income of only 5 lakhs rupees. So normally it should be zero. But he has agriculture income of 10 lakhs. So 10 plus 5 will be added and taxable income will be calculated. This 10 lakhs of income, agriculture income, will not be taxed. But beyond 10 lakhs, this 5 lakhs will be calculated for 30% tax. That is the idea. So it will be added for calculation of income tax from other income, other than uh, income from agriculture thing. So agriculture income is exempted, but added, if there is only agriculture income, there is no other thing, no tax at all. Otherwise, the slab will change based on the agriculture income. You have to add the agriculture income to your other income. Then agriculture income part, anyway, you will not pay any tax, but your income may go beyond 30% level, so you have to pay 30% or whatever it is for that value, leaving as an agriculture income portion. So any amount received by an individual through a co-partner from man HUF, Hindu undivided family. Hindu undivided family, it will be taxed whole. The Karta will give all those things. This is a separate subject. If required, we'll discuss separately. So there, after paying tax only, you will be giving all the members. Co-partner is members of that Hindu undivided family. For that money, it is already taxed in whole this HUF. So again, there is no tax for the person when he is given the profit or whatever income. After the HUF is given, whatever earning, it is divided by among the people. It is not taxed because it is already taxed under HUF. That is the reason. Income received by partners of a firm, same. It is like HUF. So it is like partnership firm will pay tax, and then the profit will be apportioned to the partners. So they don't need to pay again. That is the thing here. And concession on travel given to an employee who is also a citizen of India. Travel concession anyway we have that is LTC only they are discussing this one. So we have discussed in the previous video. Allowances received by government employees stationed abroad. So Ministry of External Affairs post people in all the countries. So they will get their salary plus in international currency, normally dollar or anything, separate allowance. That is not taxed. Salary is calculated for tax. Those they are earning sitting in America, they will pay tax in India because they are Indian. And they have to pay the tax, but allowance is exempted. Death come retirement gratuity up to 20 lakhs, it is exempted. If it is retirement gratuity, it is exempted up to 20 lakhs. If it is death gratuity given to the family, it is exempted up to 20 lakhs. Government pays only 20 up to 20 lakhs to the employees. Private, it may be more. So when it is more than 20 lakhs, they have to pay tax for the excess value. The commuted value of pension earned by an individual, it is fully exempted. Our pension, we can commute 40% of our pension, which I have already discussed in an video which I released in July 23, I think. People should go for commutation of pension. Again, I did not repeat. People can see that video. And any amount earned via encashment of leave at the time of retirement. At the time of retirement. For private employees, the maximum limit is now fixed 25 lakhs. Earlier it was 3 lakhs only. From this year, they have raised it to 25 lakhs. For government employees, there is no limit, but this earned leave encashment should be only at the time of retirement or death also. Of course, to the family, it is final payment. But government employee can encash during service maximum 60 days, 6 times 10 days along with LTC. That is taxable. That encashment is taxable. Same way, private also people get leave encashment, earned leave encashment, if they don't avail with certain limitation, whatever it is, depending upon the company, that is taxable. But at the time of retirement, it is fully exempted up to the limit of 25 lakhs. For government, that limit also is not there. It is only 300 days. For private, no such condition, value, financial value. Okay. Government, they get only 300 days, so it is full amount as given as exemption. Compensation paid to workers due to relocation, that is a transfer grant. It is government also it pays, it is not taxable. Any compensation obtained in the event of a disaster, it is a special compensation, so it is not taxed. Any amount acquired via through a life insurance policy, insurance final, because it is already taxed. Every year you pay tax and then pay premium, so it is not taxed again. Life insurance only. Any payment received via the statutory provident fund, general provident fund, employees provident fund, public provident fund, every provident fund is exempted because it is already taxed. When you pay amount, when you contribute the amount, you pay tax and only contribute. It is already assessed. So second time there is no need for reassessment. Any payment received through a superannuation fund, NPS, etc. So they are not taxed. House rent allowance subject to a certain conditions we are discussing now. And income received by family members of the armed forces in the form of pension due to death of personnel while on duty. It is, they were killed in action. So they will get full this thing, which is exempted. It is a special concession because the person has actually given his life for the country. So the family, only that family pension is exempted, not normal family pension. Now, apart from that, remote locality allowance up to 1,300 per month is exempt. Beyond that, it is taxable if they get. Special compensatory hill area allowance, normally it ranges from 300 to 7,000. So area wise it is. So that is exempted. Tribal area allowance exempted up to 200 per month. And armed forces, they get a lot of special duty allowance and that is exempted, for not for other people. Even for central government employees, it is not exempted. But armed forces, some, because they have to leave the family and go around all those things. There is some special concession. So if required, we will discuss those kind of things separately because I wanted to limit the video size also. So I have stopped at this level. Now we will see the house rent allowance calculation. How much it is exempted. First condition, there should be a component of house rent allowance paid in the salary. Second, the person should pay rent for his stay. If he is staying in his own house, there is no concession, no exemption under income tax. He has to pay tax for the entire house rent allowance received. And that rent should be, whatever rent he pays, should be more than 10% of his salary. Salary is only basic pay. Dearness allowance can be added if the DA is taken into account for his retirement benefit. For government employee, DA has to be taken into account because gratuity is now paid, under retirement benefit, gratuity is paid with the DA also. So for government employee, the salary means here basic pay plus DA. If private, they don't have any DA component for their retirement benefit, then it is only basic pay. If their retirement component like gratuity, etc., is paid with the DA calculation, then their salary will be calculated basic pay plus DA, and that value will be kept one part, and rent should be paid more than that, more than 10% of that, not more than that, more than 10% of that. We'll see now. So now, least of the following is exempted. That we have given three items. Number one, actual HRA received. You see, you get 10,000 rupees HRA every month. Okay, 10,000 you keep as A. 40% of salary for all the places except principal metro cities, which are Delhi, Mumbai, Calcutta, and Chennai. For these cities, 50% of the salary. Salary we have already told, pay only or pay plus DA. If DA is taken into account for retirement benefit calculation, salary component will have DA also. Otherwise, only basic pay is called salary. So 40% of salary, which may be only basic pay or basic pay plus DA. And rent paid minus 10% of salary. That is why I said rent should be paid more than 10% of the salary, I said. Now, let us say 40% of the salary is, let us say, basic pay is 24,000, let us say. No, 20,000, let us say, 20,000. So 40% is 8,000. So HRA received is 10,000. Now rent he has paid, let us say, 15,000. Or for simple calculation, 10,000 we'll say. 10,000. So 10% of the pay is out of 20,000 basic pay. DA we are not taking into account here. I deem it as it is not taken into account for retirement benefit. So 20,000 pay. So 10% is 2,000. So that 2,000 you have to deduct from your rent. So that also comes to 8,000. Now the least of the amount is 8,000 only. Assuming that he pays 15,000 rent. So 2,000, 10% value, you deduct 13,000. You have 13,000, one value is the HRA 10,000, 40% is only 8,000. So 8,000 is paid. Now 40%, the person gets 40,000 basic pay. Same, HRA 10,000. Rent he pays 15,000. Now, rent he pays 15,000. 40,000, so HRA is 10,000. 40,000 of salary is 16,000. And the rent paid minus 10% of salary is 13,000. 40,000. So 4,000 you have to write. So 11,000. So here you get HRA is 10,000 value. Now what I am trying to say is all these three values will be calculated and least value will be taken as deduction. Now in a training, it was training for our government employees. My colleague from some other department, it was actually common to other department. He was surprised. अरे भाई साहब ये समझ में नहीं आ रहा क्यों 40%, 50% लेना है? Because in government, this problem won't come. For government employee, this 40% part need not be taken into account at all. But for private, they will, if this condition is not there, they will say basic pay 20,000, HRA 30,000 they will say. So now 40% of 20,000 is only 8,000. So salary component, they will have a kind of basket. And they will say fix at this, you can adjust bouquet of benefit they will say. So you can put anywhere with whatever exemption is possible, he can do. But government, it is not possible. That is why this 40% or 50% business is, this condition is only for private employees, not for government employees. I explained this. This is not for us. This income tax is for all salaried employees, including private employees. That is why this is given. If it is only for government, A and C will do, B is not to be calculated. Now, another point, HRA, if you pay annually 1 lakh rupees, more than 8,300 rupees in a month, you have to get the PAN number of the rent receiver, landlord, and submit with the rent receipt has to be given, but it should be with a PAN card, because his income will be through the PAN card. The rent receiver, income of house property, he has to give for income tax calculation and pay. This is that. So now HRA, either actual HRA or rent paid minus 10% of the salary, one of the lower rule will be amount exempted or income tax calculation for old regime, not for new regime. New regime, everything has to be paid. Now, common deductions, we already discussed, I think. Again, it has come. Okay. Common in the sense new and old also. Pension fund, up to 2 lakhs we have discussed. Conveyance, traveling, everything we have discussed. Transport, we have already discussed. So, with this, we complete second other part. Now, in the next video, I think we can make the calculation and close the income tax video, I suppose. Let us hope for the best. Thank you.